Good morning, good afternoon, good evening, wherever you may be. This is Sid Norris from Elliott Wave Plus, and this is the Synergy Traders number 55 presentation, January 30th, 2025, entitled Tech Wizards 2025 Conference. So thank you to David for considering me a tech wizard and inviting me to present here. Um, my presentation today is going to be about sentiment. So, how to use sentiment in trading. And we're very big on sentiment here at Elliott Wave Plus. And what sentiment, the way we look at it, what it does is it allows us to choose which items are most ripe for a significant trend change in the markets currently. And we look at a lot of items. Before we get started, though, I'd like for you to be aware of my disclaimer. To read my disclaimer in full, please go to my website, elliottwaveplus.com, and scroll down to the bottom of any page on the site and click on this Terms of Service disclaimer tab. The disclaimer is there all the time, so please go there and read it in full. If I were to summarize it in one sentence, it would be there's a risk of loss in all trading. I'd like to go back and just give you a 10-second view of the website once again, and there's one particular tab I'd like for everyone to be aware of. It's under the Resources tab. We have lots of educational videos there about what we do and how we do it. Lots of educational PDFs and documents there. We call them guides about what it is that we do and how we do it. And then there's also the blog. And when you go to the blog, you'll see a lot of different recordings, most of them on YouTube, going back um, years. I've been doing this sort of work since 2010. We also have a YouTube channel, and you can find it at and my YouTube channel is called Elliott Wave Plus, and lots of educational material as well as other recordings we've done for different events there. Um, Also, when you go to our main site, if you'll scroll down a little bit, you'll see that yes, first and foremost, I am an Elliottian, Elliott Wave practitioner, but the reason I call my service Elliott Wave Plus is we add quite a bit of additional items to the toolkit. One is we have automated momentum-based trade signals that we send out every night to our top-tier service subscribers. Today, what we're going to look at is extreme sentiment positioning and how it can clue us in that there's a virtually immediate trend change or imminent and significant trend change coming up on any particular item. We cover probably over 40 items and send out screenshots on a weekly and daily basis, showing, so allowing our subscribers to focus in on which ones are the most likely at the end of a trend and about to have a trend change. The reason that's important is as an investor or position trader, if you can get in early on a new trend direction, you don't have to sit and day trade at your computer constantly. You can actually be an investor, where you pick your golden moments to buy early in a trend, and you can sit and watch it work in your favor for weeks, months, and potentially years sometimes. Um, we look at intermarket correlations and how If one particular item is looks ambiguous currently, there might be another very highly correlated item that gives higher confidence in the way it's moving, where you can kind of get an idea of sectors that might move together. We also look at in multi-time frame divergence on momentum indicators. We include Hurst cycle analysis. I won't go into that very much today, but I'll mention it here and there. And of course, we use Elliott wave and its associated Fibonacci price targets. So, and then we have 4 subscription tiers. If you click on any of those, it'll take you to additional pages that will describe everything about those and how much the subscription is, et cetera, et cetera. So that is our website, ElliottWavePlus.com. So what am I going to cover today? I'm going to look at sentiment, and specifically what we do here at Elliott Wave Plus is we compare current positioning, the current positioning of commercials versus retail traders. So first thing I'm going to do is I'm going to define who are in fact the commercials and how is it that they trade? What is their trading objective? And then second, after that, we'll look at why commercials positioning in commodities are the most important commercial positioning to track, and how the commercials positioning commodities is more indicative of than commercials positioning is in the stock market or bond market or currency markets. Commercials positioning is indicative in all of those things and predictive, but does the best job, and I'll prove it to you today, in the commodity space. This is one of the reasons why longtime professional traders often move away from the stock market and away from currencies and into the commodity space. This is where some of the most famous traders, including Larry Williams and others that have really specialized, is in commodities. And there's a reason why. And the reason is because the sentiment conditions there are more accurate. And then we're going to look at how when we compare commercials to retail positioning, it can pinpoint and predict major trend changes over and over and over again in the markets. I'm going to show you some current examples on all of those of things. We're going to start with the NASDAQ. We'll look at bonds, silver, corn, the Australian dollar, and live cattle. So that's a nice mix of the stocks, commodities, currencies, and bonds that I'll show you today. And then finally, when we sew this thing up at the end of the hour, I'll want to remind you that if you've never subscribed to any of our services here at Elliott Wave Plus before, you'd be a new first-time subscriber, email me, sid@elliottwaveplus.com, to set up a 50% refund on your first month as a paying subscriber. So why don't we get straight to the charts? So this is what we call our weekly sentiment conditions chart template. By the way, I use Trade Navigator by Genesis and have for almost 20 years as my charting platform. And there's several important reasons why I stick with it. One is I have literally probably many hundreds of charts and Elliott wave counts and associated Fibonacci price targets at multiple time frames that I have been developing over the last couple of decades here. But there are other reasons why I really like Trade Navigator. One is you can put all charts in Simulog mode, and the Fibonacci drawing tools work in Simulog mode. Now, this isn't the only platform that'll do that. TradingView is an example of another one that will, but other important ones that are very commonly used, like Thinkorswim, won't do it. You might be able to put the chart in Simulog mode, but the drawing tools don't work using Simulog math when you do. That's critically important. So I'd like to explain to you a few things about the weekly sentiment conditions template. So there's three indicators at the bottom of every page. One is commercials positioning on a 12-month look back. And what that means is this indicator shows how commercials are currently positioned as it relates to their most bullish and most bearish positioning over the last 12 months. So right here, they were positioned as bearishly as they had been at any point in the last 12 months. Now, there's something you have to understand about commercials. Who are they? Well, here's the definition. I'll put it right on the screen for you. Commercials are an entity that involved in the production, processing, or merchandising of a commodity. So that's the base level definition. And so, for instance, if we were looking at a gold chart right now, the obvious commercials would be gold miners. They are involved with the production, processing, and merchandising and sale of gold. So they buy acreages. They do lots of geological research on those. They drill samples. They find these veins of gold down in there. They can map it 3D, and then they mine it, pull it out of the ground, and then they sell it. So the price of gold to a gold miner is incredibly important as it relates to their profitability as a company. And so what the commercials will do is, if they think the price of gold is overbought, they will hedge. In other words, they keep large trading accounts, and they will hedge their business interests. In other words, they will short gold to make money, make profit in their large trading accounts. If the price of gold, while the price of gold goes down, that will help offset losses that they or have the need to sell gold at a lower price and therefore reduce their profitability. So commercials hedge business interests, and here's how the commercials trade. If an item has been trending for an extended period of time, they will gradually build a position against it. In other words, they assume in their trading that the item that they're hedging or not hedging is going to move up sometimes, and it's going to move down sometimes. And the longer it's been moving up, the more they hedge against it. In other words, short it. They build a short position against it. They are the opposite of trend followers. Retail traders, on the other hand, are trend followers. They will only, and the last presenter is a very good example. She'll only trade with the trend. And when something's been moving up strongly, she wants to be in there, on that trend and take advantage of it. And that's how retail traders generally trade. The only problem is that when retail traders continue to chase price and chase it and chase it and chase it, what they end up doing is uh, there would be a very large percentage of retail traders that are all over on one side of the boat. So this second indicator down here is the daily sentiment index, which shows you the current percentage of retail traders that are bullish. So you can see right here, well, let's go back here. Right here, there were 88 88% of retail traders were bullish. And the reason is because the NASDAQ, in this case, had been moving up strongly. And the retail traders that wanted to short it probably had to exit their shorts in a loss. And there was nobody left to short in the retail domain. Everybody was long and they thought it would just keep going up. That's where that 88% of retail traders were bullish. That was right here. Do you see that little triangle right there? Those little triangles, pink triangles there, green triangles down here on this template means that over 85% of traders are bullish, or less than 15% of traders are bullish. And so the retail traders have a tendency to get all over on one side of a boat just before it capsizes. Whereas, look at what the commercial traders were doing here. So as the NASDAQ was moving higher, commercial traders were building a short position against it. And so they would continue to get short. And so this indicator shows when commercial traders as a group are uh, heavily long, and it shows when they're heavily short with these color codes. They're heavily long when it's green, they're heavily short when it's pink. And so at this juncture right here, commercials were heavily short at the same time as retail traders were heavily long. And that is what here at LA Wave Plus we refer to as a perfect storm of bearishness. It's the commercial traders almost always win out. They are generally considered the smart money. Retail traders are considered, quote unquote, the dumb money. And so it's really important to track how the commercials are currently positioned against how the retail traders are currently positioned. As Larry Williams said many times in many of his books going back decades, you really don't want to bet against the commercials. And so it was at that moment that we had a perfect storm of bearishness. And yes, the NASDAQ, these are weekly candles, spent the next several weeks moving to the downside. Now, when we look back at where were the perfect storms of bearishness and where were the perfect storms of bullishness on that, we can see them on this chart very easily. Right here in November of 2021, as you may recall, it was in November through January timeframe of 2021, 2022, that we got some market tops that lasted well over a year. And the year of 2022 was quite bearish in the stock market. So at that moment right there, commercials were heavily short. 93% of retail traders were heavily long right here. And when at the point that the commercials became heavily short below this threshold here, it puts up a pink zone here and a red box. And then if the 3-period moving average of the weekly close of the daily sentiment index, the retail trader, how retail traders are positioned, if it starts sloping to the downside, then the candles turn red. If it's sloping to the upside, the candles turn green. Okay, so that the 3-period moving average of the DSI determines the color of the candle. So when you get your first red candle within a red box, that is the perfect storm of bearishness on sentiment. And you can see that that happened on the very top tick weekly candle back in November of 2021 on the NASDAQ. Rather perfect, I must say. And then after the 3 full quarters of downward movement down into October of 2022, we had at this juncture right here, all of a sudden we had the commercials building long positions. Now, many people thought that this was going to be the low at the time, I remember, uh, June of 2022. But look, the commercials were still short. The commercials didn't get heavily long until October of 2022. And then on right here, the retail traders that had thrown in the towel completely, and there were only 5% traders, retail traders, that were bullish. This is a perfect storm. Retail commercials heavily long, retail traders heavily short, thick green box, and then right there, that candle was the first green candle within a green box. That was in October 2022, and that was the beginning of the bull market that is still underway today. Now, there was an expectation of a pullback here because retail traders or commercial became heavily short, retail heavily long, perfect storm, got a pullback. But there was a period in October, November of 2023 where in the stock market, we did not get a perfect storm signal of bullishness. Well, so you can see that commercials remained hedged, whereas retail traders got down to a 15, a quite a low number. And so based on the position of the retail traders, there was probably going to be a bounce here, but in that particular instance, commercials did not give us the indication we would have preferred to have gotten in October and November of 2023 in the stock market. And ever since then, the there haven't been any really clean, clear, perfect storm signals, even though the market has continued higher until December of 2024. And in December, on December 20, we got the first red candle inside of a red box. Commercial traders were heavily short. Retail traders were just off an 83% bullish, and that was a perfect enough storm. And we've gotten some downward movement there on the NASDAQ. Oh, now these perfect storms that show on our weekly sentiment condition screenshot will dissipate after they have developed, and then but because these are made on a weekly chart, they can have a powerful suggestion moving forward for many weeks, potentially months, from the point of that they give you that signal, and so the way we think of it here at LA Wave Plus is the weekly sentiment condition screenshots, which we provide weekly to our premium plan subscribers. Imagine, if you will, you were going to a ball game in a big city and you'd never been there before. You were visiting and you rented a car. Well, you would use a GPS to take you to the ballpark, to drive to the ballpark. And this it basically gets you to the ballpark, the weekly. And then we, on a nightly basis for premium plan subscribers, we send a daily version of it. This shows a little bit different look. It'll show the positioning of much faster acting commercials movements. So this is a Larry Williams idea. It's a commercials as a percent of open interest. And you can see right here, they were thinking that we would get a bounce on the NASDAQ. So we got our first green candle inside of a thin green box. That was on January 15 of 2025. However, the commercials on a 6-month look back and a 12-month look back were not in full agreement with that. And so you can think of this on the daily sentiment condition screenshot as the fast acting, medium speed acting, and slower acting commercials positioning. And so this one is shows their most bullish and bearish positioning over as it relates to or well, their current positioning as it relates to their most bullish and bearish positioning over the last 6 months, and this is over the last 12 months. And then down here is the daily sentiment index, the current percentage of retail traders that are bullish. So as a reminder, what we look for is what we saw back in here, and that is commercials heavily short, retail heavily long. And then we also got this brown stripe right here. That meant that on that day, the ADX indicator was showing over 60 on a daily chart, extreme overbought conditions. And you can see that that created a perfect storm of bearishness, and we got a few weeks of downward movement. Look at what's happening right now on the NASDAQ. The commercials are starting to return back to fully hedged position on a 6-month look back and a 12-month look back, and they're starting to pull back from the fastest acting commercial positioning. And so this is, I would have to say, a more bearish. This is a return to a bearish perfect storm or bearish condition on the NASDAQ. Notice that retail traders got all the way back to a 71% bullishness back here. This move to the downside right here, that was on Monday of this week, came out when DeepSeek announced that they had developed a equally effective AI model to the best American model, and it used about 1/50th of the energy and computing resources to do so. That's big news, if you ask me. Very big news. And by the way, I made that big news available to my subscribers. So this is an article that first came out in October of 2024, and I presented it to my subscribers in my weekly webinar in late November, and it talks about a way to use the math, a different way of doing math in a computer that requires far less ultra high speed chips and computer resources and therefore energy suck in order to do AI sort of computing. So my subscribers were made aware of that back in late November, and it wasn't until right here that that bombshell hit the market. Well, this is just incredibly important news, and it's one of the reasons why NVIDIA is likely to pull back. And I keep a active wave count on NVIDIA and Apple and all kinds of other individual stocks. I show them every week in my webinars. And this should require far less computing resources and therefore data centers, NVIDIA cards, et cetera, moving forward with this much more efficient way of computing. So my subscribers were made aware of that. So let's move on very quickly. I've explained to you now how the weekly and daily sentiment conditions, proprietary screenshots that we show our subscribers work. And I used that on the NASDAQ. And we found that it worked well at the late 2021 high, as well as the November of 2022 low. Worked very well on those. Here's the same thing on bonds, the ZB contract, 30-year. Notice the commercials are currently heavily short, and therefore I think that this bounce that we're getting here will be short-lived. And because getting along at this juncture might be jumping the gun, considering on bonds, considering that commercials are still heavily short or fully hedged on the 30-year bonds. Notice right here, the commercials are heavily long only 12% of retail traders were long. Perfect storm, October 27th, perfect storm of bullishness, green candle, just slightly after a heavy green box. And that was an important low. And then in August of last year, we had commercials heavily short. Retail got up to an 86% bulls. And just at that golden moment when retail threw in the towel on being bearish, they all jumped the gun on being bullish. It was just very close to an important peak, and the markets moved down. So as you can see, this is very much a contrarian system. It trusts the fact that retail traders are usually dead wrong at major turns. Are there any other perfect storms examples? Yes, there's one right here. This was in November 2022, November 11th of 2022. Um, Perfect storm of bullishness. Commercials heavily long, retail heavily short. Green, dark green box, thick green box, first green candle in there, boom. And that was the beginning of a move up. How about right here? Well, commercials had all of a sudden put back on all their hedges. And so this was a bearish condition. Retail, not hugely long, but pretty much. And so when you get a near perfect storm, But it, but in this case, retail traders only got up to 74% bulls. So I generally, the really big, when you get up into the 90s or upper 80s is typically where you see tops, but you can, like you did right here in this 86. But still, it was a perfect storm of bearishness. And so you can see it called this low. This system called that high, it called this low, and it called this high. And you can see that it isn't calling a bottom yet. Well, let's look at the daily chart on the ZB contract. And here's some additional things that we provide to subscribers. On the daily sentiment conditions screenshots, we also include seasonality. So we're very close to entering a period of bearish seasonality on bonds. So that means that about 80% of the time over the last 15 years, bonds have closed lower on February 14 than they opened on January 31. Notice that commercials are all heavily short on the ZB contract. So this does not appear to be the time to buy bonds. So what is my, I'll move to my wave count on bonds. Notice that on the wave count, I'm expecting from this September 2024 high, which her cycle analysis considers a 4.5-year cycle peak, that I think it's that bonds are moving down in a 5-wave structure and they won't bottom until approximately mid-March, and that this should turn pretty soon back to the downside for one more leg to the downside. By the time we get to mid-March, I'll be looking very carefully at the daily sentiment conditions to see if the commercials, by the time we get into mid-March, have taken off their hedges and started getting long. It'll be an important clue that we could be bottoming in a very important bottom. Notice that her cycle analysis, that's where these dates come from, is expecting a full 1 year bull market on bonds from March of this year through March of 2026. So there's the ZB contract on bonds. Let's see, we're still got plenty of time here. Let's take a peek at silver. The reason I wanted to show silver to you is of all the different weekly sentiment conditions template screenshots that we provide to subscribers, this one going back has been, I think, has done the very best job of pinpointing these perfect storm conditions. So this is a weekly chart of silver. Right here, commercials heavily long, retail heavily short, perfect storm of bullishness. Boom. Right here, commercials heavily short, retail heavily long, perfect storm of bearishness. Boom. Right here in September 2022, commercials heavily long, retail heavily short, perfect storm of bullishness. Boom. Right here in May of 2023, commercials heavily short, retail heavily long, perfect storm of bearishness. Boom. Now, this is one little spot where it really, the commercials were kind of neutral, but retail got all the way down to a 9. So the retail, the DSI, only 9% of retail bulls. That's the lowest reading of a DSI reading anywhere you can see on this chart. This goes back 3 or 4 years. So it was sometimes the DSI gets so profoundly low that the retail traders are going to, in this case, going to have to sit through a short squeeze. And then right here, commercials heavily short, retail heavily long, pullback. Once again, commercials heavily long, commercials heavily short, retail heavily long, perfect storm of bearishness, pullback. So what's the situation right now? Well, silver's kind of been moving sideways. It did pull back from that perfect storm of bearishness, and it's been kind of moving sideways. But notice that very recently, commercials on a 12-month look back are starting to put their hedges back on. And retail traders were all the way up to 77. Can you imagine? 77% of retail traders are bullish silver right here. Why? I mean, this doesn't look like an uptrend. This looks like a sideways consolidation after a down move. So 1, 2, 3, or A, B, C, to my likely a bear flag, but the retail traders heavily long. So let's look at my actual wave counts where I combine LA wave and Hurst on silver. That's the very long-term chart. I think silver is involved with a wave 4. And it's this sideways movement we've seen lately is very likely a bear flag or a triangle, an LA wave triangle, and that we won't get a next buying opportunity, and according to Hurst, until at the earliest, early April. And then we could look for a multi-quarter rally to the upside. Here's the daily chart. There's a big pop to the upside. Today, as a matter of fact, I'll turn on the streaming here. That pop to the up, those candles were only good through yesterday's close. We had a big pop to the upside today. So is this going to be a big breakout move to the upside? That I'm already getting emails from my subscribers. It's like, hey, what do you think of what's happening in silver? Um, and I'm trying to get that candle to appear here. Hang on. Turn off the streaming, turn it back on real quick. I'm trying to get today's candle. It's a very bullish candle in silver. And so I'm already getting emails from subscribers says, hey, is this going to be a big breakout move to the upside? Well, uh, so I want this candle to show up right here if I can get it to do it here on silver. Wow. Well, anyway, I'll represent to you that it shot up to here today. And I would have to say that my answer to that question is no. I don't think silver is going to break out there. We finally got on the weekly sentiment that candle to show up. Let's go back to there it is. So is this going to be a breakout move to the upside is the question. And based on what I see from the commercials positioning and retail positioning, On the weekly chart, let's move to the daily chart. The answer is probably no. So we're all the way up to a 77% retail bullishness on retail. That's probably too high of a reading to expect this to be a breakout move that just keeps going. And notice the commercials as a percent of open interest, the fastest acting commercials indicator I have, it doesn't look like commercials necessarily want to do anything other than fade this bounce. It's starting to move away from being uh, long and putting back on their hedges. So that's silver. Let's look real quick at a couple of other items. We'll go to corn. And I still want to show you corn, the Australian dollar, and live cattle. You won't believe the live cattle chart. Um, and the other thing I want to mention here is there is a tendency on retail traders to fall in love with the stock market, and they all fall in love with with stock market indices, and trading those. Well, there's always going to be a higher confidence trade somewhere, in my opinion, always in the commodity space, a higher confidence trade than there would be in the stock market. And we have the added assistance of knowing exactly who the commercials are. The commercials in corn would be the producers of corn. They make it their business to know everything about corn. The demand, the current price, where they think price is going, demand around the globe, weather conditions, all of it. And notice what we saw on the weekly sentiment conditions on corn, and my subscribers were made aware of it, that there was a perfect storm of bullishness brewing down here, where commercials are heavily long, retail only 8% bulls, and that pretty soon turned into a nice move to the upside. And notice, look what the commercials are doing. They're already positioning against this move to the upside. They're protecting themselves from what they think is going to be a dip next, but not the retail traders. Retail traders all of a sudden all the way up to an 81% bull. So this has turned into a it's very near a full-on perfect storm of bearishness. Also on corn, on the weekly chart, the corn has moved up so fast that the ADX indicator is over 60 on a weekly chart. So that's this brown zone here, this brown zone here, and now we're in a brown zone now. Overbought, severely overbought on a weekly chart. So we've moved from a perfect storm of bullishness to a perfect storm of bearishness, or very near it. So what do we need in order to get an official perfect storm of bearishness? Well, we need a red candle. That means that the 3-period moving average of the DSI would start sloping to the downside. That hasn't happened yet, but I would have to say that it is imminent. How about the daily sentiment? Um, yeah, this is very quickly turning into something that would turn into a perfect storm of bearishness. And after a perfect storm of bullishness developed down here, when retail traders thought corn was going to go to zero. Okay, next item. Let's look at the Australian dollar. I would have to say the sentiment's been working beautifully well on the Australian dollar. Here's the weekly chart. They're in October 2022. We had a perfect storm of bullishness. Retail traders heavily short. Commercials getting longer there. It wasn't quite perfect, but it's very close. So notice that the retail traders got all the way down to a five right here. So when you see the DSI get to that kind of extreme, there's going to be a short squeeze. They were all short. And then here in so we got the nice move up here. And then in February 2023, commercials heavily short, retail on the long side, perfect storm of bearishness, first red candle in a red box. Downward movement. And then in October 2023, commercials heavily long, retail heavily short, as low as a 12 right here. Perfect. And first green candle within a thick green box, and we had some green triangles showing up nearby. Bullish. Bam. Then in July of 19, we had a bearish perfect storm. Commercials heavily short, retail heavily long. That's a perfect storm of bearishness. And we got that first move down. That candle right there was that first weekly candle in August. That was the yen carry trade unwind. And I will represent to you that central banks around the globe immediately jumped in and caused this as they went into full-on panic mode on the yen carry trade unwind. That was back in early August. But notice that it went ahead and developed the same based on the perfect spread right here. It developed into more downward movement. Enough downward movement now that the commercials are heavily long, retail only at 10, perfect storm of bullishness, a little green triangle down here, very close to that. So in mid-January, we had a perfect storm of bearishness, bullishness develop on the Australian dollar. Let's look at what's the daily sentiment is telling us. There's the perfect storm of bullishness, very close to that capitulation low. And this looks like to me a 1, 2, 3, 4, 5 wave up structure followed by a partial pullback. And so moving to the Australian dollar wave count, Hurst cycle analysis. Actually, yeah, I was thinking that this would be the 4.5 year cycle trough, and Hurst changed its mind and decided that's exactly what it was. A 4.5 year cycle trough, large cycle trough, and the prognosis for the Australian dollar is for a move to the upside all the way through mid-year. The Australian dollar very recently really kind of a capitulation, sort of very large degree, low bullish divergence showing on daily chart on the RSI. And then finally, live cattle. This one, it kind of blows my mind. I did this chart for a professional hedger in the cattle business for him recently. And I did that last week, and I don't know, the word must have gotten out because it would on Monday of this week, even Jim Cramer, who almost never talks about commodities like live cattle, was talking about live cattle based on the technicals. And here's the reason why uh, that would have made it onto that mainstream of market coverage. Notice the weekly sentiment on the live cattle. Commercials are fully, heavily hedged and short. They really haven't been hedged since lately, but they have been building a position against this move to the upside. And just a couple of days ago, or actually yesterday, no, last week, 88% of retail traders were bullish. So we had commercials heavily short, retail 88% bullish. That's a perfect storm of bearishness. Bearishness. And also notice this third indicator that I put on all of the weekly and sentiment charts. It is the money flow versus RSI indicator. So when the RSI is moving to the upside, the question, like it was right here, the question becomes, is there volume behind that move to the upside? And right back here, there was, because the money flow indicator is a volume weighted RSI. So I've superimposed that on an RSI indicator. The RSI is black. The money flow indicator is blue. Whenever you see that kind of peak right there, you can almost always rest assured, not every time, but almost always rest assured that that is not going to be as high as this item's going to go. And then, but here lately, notice this kind of triangle here, A, B, C, D, E triangle. And this as a 1, 2, 3, 4, 5, it probably has a little bit further to go, but notice that the money flow is lagging the RSI, and the RSI is very near its overbought territory. So overbought on a weekly or any RSI is 70 or above. And right here, the RSI got up to 68.65. So very close to overbought territory in the RSI, but the money flow is lagging it. That is also warning of a imminent peak. So that's the weekly sentiment. Let's look at the daily sentiment. Notice on the daily sentiment, we also have this bullet. We're showing that there's still a period through mid-February of bullish seasonality left on live cattle. And that warns that it still might be too early to get in. So let's look at what I've done with the Elliott wave count, and that also includes first cycle analysis. This chart goes all the way back to 1969. It's a monthly chart. And I believe that what we're seeing in live cattle is a recognizable Elliott wave pattern. An ABC for a wave one of a ongoing expanding diagonal. So each leg of this 5-wave diagonal subdivides as an ABC zigzag. So ABC for 1, ABC for 2, ABC for 3, ABC for 4. And notice that when we draw a line extending from the extremes of 1 and 3 and 2 and 4, extend those forward, we have a megaphone pattern. So this is the fifth wave of megaphone patterns are often blow off tops. They're aggressive moves to the upside. And that's exactly what we've been seeing since March of 2020 on live cattle. But it still needs to subdivide as an ABC. And typically, a wave 5 of an expanding diagonal stops going up just shy of reaching a line extending from the extremes of 1 and 3. So it's very close to that. Also, wave 5 of an expanding diagonal must be longer than wave 3 was. And that is actually, it doesn't look like that. It's sort of an optical illusion, but that has actually already happened right here. I've measured it. And then wave 3 of an expanding diagonal must be longer than 1. Wave 2 must be longer than, I'm sorry, wave 4 must be longer than wave 2 was. And wave 4 must overlap into the price territory of wave 1, which it did do in March of 2020. So moving to the weekly chart. This is a weekly chart of live cattle. So this low in March of 2020 would be a 9-year Hurst cycle trough. And it appears that we're moving up into a 9-year Hurst cycle peak nest. We'll have to show you Hurst cycles on a different video later. I've shown how Hurst cycles work in many, many videos. As a reminder, please go to our YouTube channel, Elliott Wave Plus, and you'll see lots of educational material there where I talk about all the different systems that I use. Um, and notice the wave count up from this low. We needed A, B, C zigzag, and then the Elliott wave, that would be a 5, 3, 5 structure. So 1, 2, 3, 4, 5 for a B wave, and then a 1, 2, 3, and this is important, a triangle for 4. So in Elliott wave, a triangle is the last of the whatever it is always followed by a thrust, an aggressive move. Some would call it a blow off top sort of move up out of a triangle, and there can be bearish triangles as well, where the thrust is to the downside. So if this was a B wave triangle, this might have been a down thrust out of a B wave triangle. But in this case, this is a wave 4 triangle. So this needs to be a 5 wave up structure into this high. It needs to be aggressive. It has been aggressive. And there's a couple of Fibonacci price targets. One is where wave C in burgundy would be a 0.618 expansion of the entire length of wave A. So you consider this a length of 1. Take that times 0.618 and look up and add that to the top of wave A. And then also the best target for the end of fifth waves would be where black wave 5, and this would occur at about 220 on live candle, would be equal to the net traveled of 1 through 3 black times 0.618. And that, so we have a Fibonacci cluster target. We have some potential resistance we're nearly hitting, and we just need a finish of a 5-wave structure that upside. This could be a very meaningful peak in live cattle and would have a multi-quarter and multi-year pullback. Hurst is expecting the next pullback to be down into a 9-year cycle trough in November of 2008. As a reminder, here at Elliott Wave Plus, so we have 4 subscription levels. Please go to the site at elliottwaveplus.com to take a look at the different levels. If you've never subscribed before, or you are a first-time subscriber, or maybe you haven't subscribed in many years and all of a sudden you see all the improvements we've made and you'd like to resubscribe after a long absence, send me an email, sid@elliottwaveplus.com, and we'll work out a deal where I will immediately refund 50% of your first month payment back to you. That is everything I have. David, are you ready for